Welcome back to Power Lunch. Shares of Pinduoduo's parent company, PDD Holdings, you can see they're rocketing higher, up 18% after strong results. Pinduoduo owns the e-commerce site Temu, and this comes as Temu rival Shein files to go public. It's a lot of names, alphabet soup, but let's bring in Eunice Yoon on set here to break it all down. But we will start with Deirdre Bosa for more on what Pinduoduo's results mean for Shein. It's all interconnected, right?
It could be. And if you think that maybe Shein is using similar strategies as Pinduoduo, that could be really good if you want to maybe invest in Shein. Of course, we don't know anything yet because it's filed confidentially for an IPO, so we don't actually get the numbers or any financial information until it flips that S1, makes it public. But we do know a lot about Temu and parent company Pinduoduo. I mean, it's interesting because it's operated on this business model of steep discounts, essentially subsidize all the products so that you loop in or you capture the American consumer. And you might think, how do you ever turn that into a profitable business? Well, Pinduoduo has done exactly that. For the first 9 months of this year, it has booked some $5 billion in profits, and it shows you that there is a path to profitability for these huge e-commerce platforms that operate on heavy discounts. So if Shein is sort of doing a similar thing in a similar model, you could see that maybe it is leading to a profitable business. Deirdre,
can I just follow up with that? Temu is like Shein, but it's different, right?
Yes.
Shein is fashion. It's pretty much clothing and wardrobe and attire. But Temu is like the next iteration of some of these apps that we've seen for several years in America that give you access to ultra inexpensive goods that are coming directly from China. I remember Wish was on my phone for a portion back in the day. What exactly then what can you actually draw similarities-wise between what's happening with Temu and how can you translate that into what's happening with fast fashion with Shein?
So it's a great point. So Temu is like an ultra low-cost Amazon, right? You have all of these different merchants that list their goods. Temu, Pinduoduo, the parent company, helps offer these really steep discounts. And that's sort of how Shein operates as well. Super low-priced goods. So if you think that the company themselves are helping to subsidize the products, whether that be clothing or whether that be gadgets on Temu, that's where you could see the similarity. And the idea of going from heavy losses to profitability, Bernstein estimates that in China, Pinduoduo went from negative 100 margin to positive 60% margin, and that's by drawing in the consumer with discounts and then slowly over time increasing the price a little bit, taking away those discounts once the user is locked in.
So, Eunice, interesting question here is, what is the presence and significance? By the way, I've heard that these companies are bigger than H&M already, bigger than Zara. How big are they in China?
They're not big.
At all?
Nobody knows.
Nobody uses them.
Nobody uses them. They don't use Temu. They don't use Shein. But Shein does, both of them actually have good reputations among sellers.
Huh.
So in a way that sellers see it as an avenue to sell into the U.S. market.
What is the deal with the Xinjiang region manufacturing issues that swirl and will get even louder as this IPO looms? What is the situation in terms of both companies' supply chain, and how is it perceived in China?
Well, perceived in China, people don't really talk about it, right? But in terms of the way it could impact Shein and the IPO, I think U.S. investors would want to look at the model for Shein versus a lot of other traditional manufacturers and traditional players, because they have this what's known as this small batch model,
yes,
which is really interesting because they basically will say to factories, we have this batch of items that somebody in the U.S. wants made, and then would you be interested in making it? And these factories will bid for it, they'll make it, and then they do it in these small batches. And so of course, like the upside of that is that you could have real-time engagement with your own customers. There's not as much wastage.
Lower inventory costs. I've heard that's a big reason why they can keep prices low.
But the downside of that is that it is almost impossible to be able to police all of those factories. So one of the ways that traditional manufacturers have said that they have been able to really try to be compliant with the very rigorous U.S. retailers and standards in the U.S. is by knowing their factories, knowing who all the suppliers are, having maybe 25 of them that they're constantly looking at. Because what I've been told time and time again is that you can demand that these factories comply, and they will sign a pledge and do whatever it is that you need, but you can't enforce it.
Interesting.
And so the more factories that you have and the more you're not familiar with your supply chain, the bigger the risk is that there is either Xinjiang cotton or whatever else problematic.
And by the way, it's an excellent point, only because the more this IPO becomes imminent, the more lawmakers, bipartisan lawmakers here in the United States, are going to want assurances about the supply chain, about the fact that they have to not only know your customer, KYC, but know your supply chain, KYSC, I think, by the time it's done. How exactly can they do that? And how heavily scrutinized would the Chinese government even look at some of those operations because of its relationship with the U.S. market?
Right, yeah. And I think when you're talking about the politics and the U.S. politicians, they've been talking a lot about this, about the way that Shein has been able to send these small batches in packages to the U.S. because it's under the U.S. customs requirements of $800 or less per consignee. So part of that is that you don't actually have to file paperwork to U.S. Customs.
Interesting.
So even if you want to look at what is the company's corporate structure, who are these people, who are the ones who are fine, like there's a lot of details in the customs information, and they don't have to do that. So it's just that it just becomes, I just feel like there's not a whole lot of transparency. And that's something that U.S. investors, I guess, would want.
And what we've learned from TikTok is it's popular enough with consumers that they will probably leave it alone at the end of the day, because that's kind of what's happened with the other one as well. We'll leave it there for now. Thank you both, Eunice. Thank you, our Eunice, Yoon, Deirdre Bosa. We appreciate it as well.